Good morning, everyone. This is Brad Matheny with a quick little update for today. Today is May 8th. This is an ES chart, 1 hour chart. What I want to try to do is go over some basic data. So remember, I talked to you guys. I'm going to clear everything. This is an overnight 24-hour chart. And I'm going to want to ask you guys to pay attention to consolidation. So look at this chart and try to find consolidation ranges. So I'm going to start by highlighting this consolidation range, and we're focused primarily on this lower move, this move downward that we saw. Then we're going to come down here and we're going to look at, this consolidation range, basically from this low all the way out to approximately this high or this high, carrying it over. We also have this little intermediate range here, consolidation across here, and really across here. So I'll try to draw them in different colors for you. And this is something that I do, mentally in my head, trying to figure these things out when we're looking at price patterns. Okay, now intraday, you can see that we've had the rally up to the flagging, breaking down into consolidation and into the ultimate low right down here. Alternately, we've had the rally up into flagging, up into consolidation, and up into the ultimate high. So you can see how we've got these excess phase peak patterns playing out consistently, right? But now let's have some more fun. Now you can see here the rally up into flagging, which essentially creates this intermediate, this intermediate excess phase peak pattern flagging right here. And I'll do that in a light blue, I guess, or green, bluish green. And then we roll into this flag low right here, right across this level. We hold at that level, and then we move up and invalidate. Can you see that? Here's our flag, here's our move down, here's our invalidate. Okay, now this also, believe it or not, sets up kind of a cradle pattern. We've got two of them. We've got a cradle pattern here, coming down, setting up the first move, coming out, setting up the second move. Any rally above this level would constitute a bullish trend to the upside, which we get right here. This is really a conglomeration of how these patterns work. Now we get the same thing here. We get this cradle pattern from this level up into this pullback, into this move, down into this area. So this pullback here, this low, and I'll set this up as a dark red. This cradle pattern in dark red sets up a low right over here, saying that if we break down below this level, we then end up bearish. So this would be a bearish move below this level. And of course, the bullish move up above this level is what we have right now. Okay, so now we come down into this level, we roll up, we look for flagging. Where's the flag? Potentially right here. Where's the consolidation? Let's go all the way over to where we're at right now. I see moderate consolidation, in this case, an upward flagging consolidation here. Make this dark blue for now. And I see moderate flagging across here. So in this case, it looks like we have a move up, coming down into flagging, rolling up into consolidation and rolling up into our ultimate high. So understand that these are how the right here, I got to change this one. The excess phase peak patterns, the cradle patterns are playing out. Okay, this is basically showing you how they're all structured together. So failure at this point within this consolidation phase sets up the move that we can't go any lower. We're moving back higher. And again, this is Fibonacci theory at its best. Now, again, pay attention here because, like I said, these excess phase peak patterns play out everywhere. Okay, so let's take a look at this. Coming down here, can you see any consolidation? I'll draw it differently this time. I see consolidation right across these levels. So basically from here all the way up to here. Consolidation. I see an excess phase peak pattern rolling up, flagging, breaking down into consolidation, breaking down into the ultimate low. I see consolidation across here, which I've already highlighted. Very little flagging. That's the one thing you have to be aware of. This looks like sideways consolidation right here, basically from here to here. And that would mean that at some point, we have to have some sort of a flag breakdown, maybe right here, breaking down, rallying up into consolidation, and then rallying up into our ultimate high. Now, almost every single one of these moves is going to be at some point a excess phase peak pattern, all the way down to 1 minute or 30 seconds. You're going to get a bunch of these cradle patterns and excess phase peak patterns. So right now, the most common pattern that I see here is basically a cradle pattern right here. And that would mean that a move, consistent move above this level would be bullish, and a breakdown below this level would be bearish. This is a flagging formation into consolidation right in this area. We are technically invalidating if we can confirm this move here. If we get rejection here, it's going to come down. So we are currently in a bit of a consolidation phase, basically running from here to here. You can see that we've set the excess phase peak. We've moved into flagging right here. By the way, the cradle pattern like this is the flagging formation and the breakdown into that early stage consolidation when the low here or here is below the flag low. So understand that the cradle pattern is very similar to the excess phase peak flagging pattern. There is a different type of cradle pattern where it comes up and does this. Up, down, up. Yeah, let me do it again. Up, down, up, down. So where you get that early stage breakdown, you don't get below the flag low and you don't get above the upper ultimate high, but you still get that area where a move up is bullish. That should be an arrow. And a move down is bearish. So where we're at right now, we're in this consolidation phase. We've rallied up here to above the breakaway. This should technically be invalidation. To the upside, I see the markets as struggling. Invalidation, so I'll do that kind of in yellow and say that we're struggling. Now, I want you to remember, this is, in this example, this rally phase up is bullish all the way up. This flagging pattern is bullish all the way up. Okay, this pullback mode is bearish. and bearish as we break down. So same thing over here. You have this bullish trend coming up. This way is bullish. This way is bullish, obviously. So you have those very solid upward trends within the excess phase peak pattern or the cradle pattern. And then you have these bearish phases here and potentially here, leading to some type of a breakout. So ultimately, guys, these patterns play out persistently. Okay, you're going to find them everywhere. And like I said, I can go down to 5 minute or 2 minute or 1 minute, even 30 seconds, and I can pick them out. So hypothetically, I'm getting some messages. Look, I'll just come down here to 1 minute, spread this out. And what would we look for, guys? Okay, what's the one thing I tell you to look for? Consolidation. Okay, so I see consolidation here, but I'm looking for the excess phase peak pattern over here, meaning the flagging formation, moving down into consolidation, setting up an ultimate low, pulling back up, pulling down, flagging. Then I would have to look for consolidation, which is potentially this wide range. So let me try to draw consolidation. I'll draw consolidation across here, potentially. I'll draw consolidation really across this level here, which may have started back over here, setting the wide range consolidation. I will draw some moderate consolidation right over here. And then I will draw some moderate consolidation right over here. Now remember, this is a 1 minute chart. So I'm looking at very short-term excess phase peak patterns. So this looks like a dual pattern here in the middle. And I'll draw it for you like this. We're coming up, we hit a peak, we roll into flagging. We roll out of flagging into the breakaway low, into consolidation. Remember, we broke here and we technically invalidated slightly here, but then rejected back down. Let me try to draw that again. This is technically invalidation, like we're seeing right now in the SPY. But if we don't hold that level and move back into the flag, this becomes invalidation, potential breakaway rally, failed breakaway rally, moving down here. If we break this low, which is again Fibonacci price theory, we then look for consolidation, then reaching the ultimate low. Now you could argue that this then continues down to the ultimate low here. What I'm going to say is that we've reached a broader high here in this move. We've peaked, come down to flagging off of that little ultimate low, and then we break down into consolidation and then down into the ultimate low here. So I look at it as kind of a dual phase pattern. We got below the lows here. We stayed above the flagging high or below the flagging high right here. We had consolidation down in the lower range, and then we eventually had our ultimate low right down here. Now, here's flagging here. Where's our flagging? Oh boy, kind of hard to see it, but it's right here. We come down, we flag just briefly right here. We rally up into consolidation, and now we rally up potentially into this ultimate high. Okay, potentially all the way up here. Now, I would argue that this would probably be the ultimate high right here. And we would have to look to see if we get any type of pattern. So we do then, and let me change these colors so you can tell that they're different. I would argue that this move here puts us into a cradle pattern right across here and here. And we break out to the upside, suggesting that we had invalidation we have a new high, and now we would be looking for flagging. Does this count as flagging? Maybe. So if we have that flagging moving upward like this, coming down to flag like this, maybe. But we would then need to find some consolidation out here in the near future, somewhere out in this area, or maybe it's already started right in this area. Who knows? But consolidation is what I look for. So now there was another one back over here I didn't get a chance to talk about. Very clean breakdown coming up. We flag out. Get this out of the way. We move into consolidation, and then we rally up into the ultimate high. So, of course, there's, multiple patterns in here. Here you can see a cradle pattern setting up, A, B, C, D, down to here. That's a cradle pattern setting up. It ultimately is saying a breakdown below this level or a break above this level. It's going to indicate bullish trending or bearish trending. We also get another little cradle pattern right over here. Looks like an A, B, C down. Looks like it goes down lower. So let me do that again. A, B, C, D. So that would mean a break below this level or above this level would indicate a breakaway move. And remember, these are little excess phase peak patterns playing out. Technically, this is an invalidation of flagging. Technically here, this is invalidation of flagging back to the upside. Now, we can come back over here and you can see this move here. Look, guys, it's a big, beautiful cradle pattern running all the way up. I'll do it in a different color. Running all the way up to here, coming down, coming up, coming back down to here. You have a beautiful cradle pattern coming right across here and here. Getting up above this would move higher. Getting below this would move downward. Okay? So, what I'm trying to show you here is the bigger term picture of where we're at. Right now, it looks like we're breaking down. We've gotten below this potential flag. We'll see how this plays out, where flagging sets up. But now we go back to the 1 hour before I run out of time. And we've got this peaking. We've got this potential A, B, C down, flagging, moving up, flag into consolidation, up into new high. Big flagging, A, B, C. We could be looking at kind of a cradle pattern setting up here, kind of like this. A, B, C, moving down into this area, which means a breakdown here or a breakaway of this move, giving us an upside range or a downside range. And of course, this is hourly. But we need to see this play out. This is a very broad rotation. I've been warning you about volatility, trying to tell you to stay cautious. We got the dollars holding up a little bit. Bitcoin's $4,000 higher. I mean, the markets are really struggling to try to move higher. You can see that, yes, we have moved higher, okay, off of this low back over here. But over since April 25th or so, we've been slogging it out, get a little break, slogging it out, get a little break. I mean, it is moving up. It is trying to invalidate, but if we fail at this point, if we fail at this point and move back downward and break below this level, we're looking at a pretty good breakdown, especially once we get below this, call it 5610. Which, based on my interpretation, would be on the SPY, 5610 would be this area here. Just gives you a better kind of a picture of the cradle pattern. Up, down, up, possible down move. That sets up this range right across here and down here. The cradle pattern indicates a potential flagging formation already. And what we have here is if we get a potential breakdown the cradle pattern itself needs to move down into this area to actually form the cradle. So we need to have that downward move take place to form the cradle. But again, this breakdown move sets up a breakaway move above 570 as a rally phase and a breakdown move below 556 as a breakdown phase. And as I mentioned to you, we have this consolidation range back over here. So remember, past price movement can play very critically into future price movement. So this would be the consolidation range where I think we would likely hit if we do break down, probably into this mode, and then ultimate lows down into here. So that's why I'm playing everything very cautious right now. Hedging what I can, leaving some of my long-term positions in play. Like I told you, we are just not out of the woodworks here until we get above this level. And this is the first rule of Fibonacci. Wish I could draw a straight line with this thing. First rule of Fibonacci is ultimate highs and ultimate lows dictate primary long-term trending. Anywhere in this range, and I'm going to highlight this for you, anywhere in this range right here. See that big yellow box? I'll make it darker for you so you can see. You see that big brown yellow box? That is consolidation. Okay? Until we get outside of that range, we are in very broad consolidation. Now, we do have a new ultimate high setting up off of these highs. I would argue that because they are so close to this high right here, that this level, 575, 576, now essentially takes over from this level. This level is still valid. This is the ultimate high. This is where we're going to have to get get new all-time highs. But this becomes the, call it intermediate ultimate high. We've rolled down. We've tried to reconfirm this level, this moderate 575, 577 area. This is going to be essentially the ultimate high area, intermediate ultimate high, meaning if we get above this level, we could potentially move up into here. Okay? But if we get above that level, remember, if price fails to get above that level, then it is very likely, and this is again Fibonacci price theory, to try to move back down. And what is Fibonacci price theory? Price must always attempt to make new highs or make new lows. So failure to get above this new ultimate high level means that it has to then try to take out new lows, and those new low levels are essentially here with the gap, and down here with this low down here. So if it fails to get above this 575, 576 rally phase, this new ultimate high right up here, the blue line, then we are likely going to try to come down. And that's what I've been telling you with this excess phase peak pattern rallying up to a new high. We got in this area. This is where I started selling 540s, 544. Remember, I didn't sell the SPY. I sold spider sectors. Why? Because I don't like the volatility of trading the SPY options. A, it would have cost me a fortune to try to get into SPY put options. And B, I can trade XLI, I can trade XLK, I can trade XLF. I can even trade XLP or XLC for 1/10 the cost, giving me the opportunity to try to trade the same move, having lower risk, granted lower profits, but I'm not betting the farm on a potential move. That's how it works. I don't like to do that. I like to be able to live to trade another day. So the idea here is trade what is effective for you. If you're a big player and you want to play the SPY and you want to bet the farm, just remember, when you're right, it's going to feel great. When you're wrong, man, it's going to hurt. In fact, it could wipe you out. And I get messages about that every now and then, about people wiping out trying to trade and be super aggressive. Learn to take, 8, 10, 12% of your account, move it into a potential trade, and be happy with a 20, 30%, 40% profit on that trade. That's, ideally what you want to do. So as we're playing this out, remember, we're not out of any congestion range until we get out of this big orange brown box. And this is the current ultimate high, 576, 577. And the downward support is at 541, 534, 533 really, and then down here at 508. If we fail to get above this 575, 576 area, I think we're going to just break down pretty damn hard into this downward side. And that's what Fibonacci price theory tells us must happen. So at this point, we got above this new high here. And the next new high to try to get above is really up in this area. And that puts us at 577 almost. So in reality, guys, failure at this point means that we're going to try to take out this low, this low, this low, this low, or this low. So how far will it go? Don't know. But those are all valid, unique lows going down, or standout lows. So we could easily break this, try to hit here, maybe ultimately try to hit here on a bigger breakdown. So you see how I start to view price like this? Short term, yeah, you can go down to the 1 minute, you can trade the 1 minute or 2 minute, and you can do the same type of analysis that I did right down here. You can go down to 2 seconds to do the exact same thing. Okay, I was showing you this move on a 1 minute. I think it was here. 4 hour. I thought it was it here? Yeah, it's got to be here. So I was showing you these moves. Let me get rid of the big square box. Okay. Maybe I have to go back to 4 hours, get rid of the big square box, and go back down to 1 minute. Squeeze this. Yeah, here's the lines. So again, the 1 minute setting up very cleanly through these cycles. And again, you can see right here, this consolidation range. I just found another one. Nice clean consolidation. So we have the breakdown into flagging, which would probably be here, into the move to consolidation, and into the ultimate high up here. Another excess phase peak playing out. You could kind of argue that we have another one right here, consolidation. So we have this same type of move up into a rally, up into flagging, down into consolidation, and down into an ultimate low. They happen everywhere. That's why I call them the constructs of price. No matter what you do, no matter what you look at, if you can learn to spot consolidation and then come back over here and look for the setup, the ABC setup, the flagging, then you can clearly see where we're at with this move. I mean, here we have same type of a setup. I'll draw it again. You get the breakdown over here into flagging, into potentially the breakaway phase, up, well, looks like maybe here's the consolidation. So here's the breakaway into consolidation and then up to the ultimate high. You see that, guys? So I'm picking apart these little 1 minute charts. And if I go down to 30-second or 5-second or 2-second, I'll be able to do the same thing. And so will you. That's what this is all about. So we'll come back over here to the 1 hour and spread this all apart. I made a mess of this chart with my drawings. I don't really care. I want you guys to see what I'm doing. Watch this video 2 or 3 times if you want. Okay, it's all about the structures of price, confirmation or rejection of breakaway levels, Fibonacci price theory, and the ability to see the broader structures from the smaller structures. So remember, I showed this to you weeks ago, but look, we come over here. This is a weekly chart. What do I see here? I see a big, broad rally phase up into potential flagging, potentially breaking down. And again, this would potentially be a fairly severe breakdown, because if we do break down, we could be moving into this area potentially for consolidation. And where do I get that consolidation range? It really comes from pretty much right in this area. See this rejection point? See these multiple rejection points? This is rejection points here. So this tells me that potentially, if we get a big breakdown, we could be looking at a move below 440 from this big rotation. Why don't I count this big pattern? Well, I could, and that would move us into consolidation here, breaking down into this ultimate low. So I could count it the same way, moving up into flagging here, into consolidation here, potentially breaking down to an ultimate low here. You see how they stack up? They're everywhere. These are the constructs of price. That's why I'm trying to teach them to you. You don't need technical indicators. You don't need really, and you can use them, but if you can see these structures in price, you can pick apart price day in and day out. You know, it doesn't matter. You can come out and what? NVIDIA? Fine. You want to pick apart NVIDIA? Let's go have fun with NVIDIA. What do you see? Do you see any consolidation? I do. Try to highlight the consolidation for you. The first thing I look for, consolidation. Rolling through here, I see more consolidation potentially right in this area. I see more consolidation right in this area. I see more consolidation right in this area. Okay, I could argue that there's a little consolidation here too. Are we getting into consolidation? Maybe right over in this area. So now I can come over here and start picking apart the trends. Do we get flagging? Well, not back over here. We do off of this low. So down here, over into flagging, or potentially into flagging here, rallying up into consolidation, rallying up into our ultimate high. Do we get flagging over here? Yep, we get here, very clear flagging right there. Breaking down into consolidation, and breaking down into a minor little low. Do we get flagging right over here? Yep, we come down, roll into flagging, rally up into consolidation, and then rally up potentially into an ultimate high. Okay, now this does qualify as flagging. In fact, you're going to see it in a lot of places. This is a cradle pattern, A, B, C, D, that broke the upside. So that's bullish. You're going to see another cradle pattern coming up. So you're going to see an excess phase peak starting, flagging, invalidating to the upside. You're going to see us move into a cradle pattern A, B, C, D here. We have a low down here, a high up here. We'll go off rejection. Broke away to the upside, reaching up here. We have another cradle pattern right here, breaking down. We would have the lows here, the highs up here. If we've broken below these lows, we have a new excess phase peak pattern right over here, rallying up, flagging into consolidation, potentially breaking down into an ultimate low. Where would that ultimate low be? I don't know. Let's come take a look. It'd be right here. More than likely, right here, or right there. Price tells us everything. Okay, 36 minutes. Had a busy day, had to go get dad at his physical therapy. As many of you know, my dad's a disabled vet, and I have to drive him around periodically. And tomorrow I have to get my brother in for surgery. I'm not looking forward to that, but at least he'll get his knee fixed. And we'll see how the markets play out here. But ultimately, I want you to understand why I am cautious of the markets right now. And it basically boils down to the fact that, we're in this wide range consolidation pattern. Still, I see a lot of downward potential in the market. And I'm going to tell you again that, in my opinion, long term, the markets are struggling. Short term, intermediate term, yeah, we've got a nice little rally going on here, but I see us struggling. And it's evident in how the bars are weakening up here to the upside. We have that ultimate high level here. I think this could be very strong resistance. And as I mentioned to you, I think we really kind of roll. If we fail up here, I think we kind of roll back down into this area, which is what I've been telling you is likely to happen for the past couple of weeks. It hasn't happened, but I still see it as very likely to happen. Okay, guys, that's it for now. Bit of a long video. Hope you like it. Talk to you later.